Namaste, welcome to Arthaniti, where we discuss money and money related tools to help you in your everyday investing decisions. I am Dr. Shefalika Gokhale. I hold a PhD in business practices of mutual fund houses. When we think of studying about investing, who better than to learn it from the greatest investor of all times, Warren Buffett? Warren Buffett, who is the co founder, chairman, and CEO of Berkshire Hathaway, is the ninth richest person in the world. The AGM of Berkshire Hathaway held on the 4th of May 2024 in Omaha, Nebraska, which is in the US. People from the world of investing and finance from all around the world flock Omaha to attend this meeting. They treat it as an annual pilgrimage. Why so? Along with discussions about the performance of Berkshire, listening to Warren Buffett and his longtime associate, Charlie Munger, who sadly was not part of this year's meeting, is a treat for investing world. But traveling to the US and attending this meeting in person to listen to these legends is not possible for all of us. So, this video. Now, in this video, we will summarize point by point what happened at the meeting. We will also try to imbibe the profound insights shared in these meetings by Warren Buffett. So, let's start. Warren Buffett's speech in the meeting was peppered with one-liners which give you instant wisdom and the thought process from where this person has become the greatest investor of all times. Now, I will list down those one-liners, and they are entertaining to listen as well as they give profound insights into the study of investing. Let's start. Okay, Warren Buffett, one sentence that he says is always look at a stock like a business, not a bet. Do not ever try to time the market. The market is there to serve you. Use it to your advantage. Next, he says, always stay within your circle of competence. Like, he does not understand artificial intelligence, so he does not delve into it. When questioned about cybersecurity insurance, he says it is a very risky business which is above his level of confidence. So, Berkshire will never go into the cybersecurity business. So, he is limiting himself to businesses where he is confident and where he understands the business. Profound, right? Where you can invest where you know what the business is. As an investor, you should go where competition is weak. Competition is always weaker in smaller companies. So what he's hinting, competition is weaker in small and mid cap segments. So that is where you will earn your bucks. Cut your losses as soon as possible and let your winners run. Take a simple idea, but take it very seriously. Next, he says, all intelligent investing is and will always be value investing. Benjamin Graham is called the father of value investing. If you read his book, Intelligent Investors, it gives you knowledge about how value investing is undertaken. Now, next, he says, investing is a game of opportunity cost. Those who keep learning keep rising in life. At the age of 93, this is his sentence from his AGM. I am smarter today than I was a couple of years ago. So, a 93-year-old man saying this teaches us a lot about why learning is a continuous process. Nobody knows where the stock prices will evolve in the short term. Investors should be honest to themselves. They should know their strengths and weaknesses. Never underestimate the power of compounding. In the very long term, very is stressed here. He says stock markets will always go up. Having the right heroes in your life is very crucial. Graham and Munger were his heroes. Next, he says always strive to become the best possible version of yourself. Everyone should set up a will. Again, very important, not to be overlooked, right? Lastly, he says the essence of successful investing is buying wonderful companies that you understand, which are led by excellent ethical managers and which are trading at a fair value. This three combination, if you can find in one company, your investing in that company would become a success. The meeting started with a 30-minute video tribute to Charlie Munger, a long-time associate of Warren Buffett. Charlie joined Berkshire in 1978 as vice chairman and has not left the side of Warren Buffett ever since, till the time of his death on the 28th of November 2023, aged 99. Warren has often called Charlie his trusted lieutenant and his right hand man. The success of Berkshire is largely attributed to the wisdom and insight of Charlie Munger. Next thing that was discussed was trimming of Berkshire's stake in Apple. Now, Berkshire reduced its investment in Apple by 13%. The reason given by Warren for this reduction was to avoid higher tax bill in case the government increased taxes to fund the ever increasing US fiscal deficit. Buffet then went on to speak about insurance, which is one of the cornerstones of Berkshire Hathaway. It accounts for nearly 40% of the Berkshire's business. Helmed by Ajit Jain, Warren praised his leadership in navigating the insurance business and reaffirmed his confidence in insurance still being a good investing opportunity for Berkshire. He also said, if there is no risk, there will be no insurance business. He reiterated the strength in Berkshire, saying that quarter one of this financial year was good for the company as it was compounding at a fairly attractive rate. Next, very important that he spoke about and that we should, as investors, think on is that every time EBITDA, earnings before interest, tax, depreciation, and amortization, he said, should not be looked into while making investing decisions. Now, this is not the first time that he is stating that EBITDA is a false value that that investors look at while investing in a company. His reasoning is that costs like depreciation, which are excluded while calculating this figure, is really an expense, even though it is a non-cash expense, but it still is an expense as it quantifies the reduction in efficiency of the assets of the company, and it is very necessary to take that into account to see the real value of the company. One sentence that left a mark on my mind listening to his speech was that the what he said was successful investing is not that all your investments will be big winners, but a few big winners makes your investing successful. When he was asked a question about reduction in the stake of Apple, he gave the reason it was for tax purposes. Rightly so, he seconded it, saying that though they reduced stake in Apple, they would never reduce stake in Coca Cola and American Express in a foreseeable future period of time. So that gives you a fair enough idea as to his investing philosophy. Next, Warren marveled at the daily earnings of Berkshire, which crossed $100 million. Today, Berkshire is sitting on a cash pile or cash equivalent investments of roughly $200 billion. When quizzed about such a huge liquidity that Berkshire sits on, he basically said that he expected tax rates in the US to go up. Why? As I already told you, to finance the mounting US fiscal deficit. And till the time he sees a viable business opportunity which is low risk and high returns, he would be happy to keep that 200 billion in cash and cash equivalent. There is a very important investing lesson here. What Buffett is actually telling us is to be patient and not rushing into making investments just because we have accumulated some money. If he can sit on a $200 billion cash pile, we can very well use that liquidity and enter the market only when the time is right and not rush into investing just because cash is available. The two books that Buffet, not only in this meeting but very often, has asked people interested in learning about investing to read and reread are The Intelligent Investor by Benjamin Graham, who was a mentor to Buffet and who deeply influenced Buffet's thought. The second one is Poor Charlie's Almanac, which gives you an insight about how investing or how habits should be nurtured so that to make a successful investor. This book is basically a compilation of the speeches of Charlie Munger. On being questioned about the possibility of Berkshire investing in India, Buffet said that it was an unexplored opportunity which the management of Berkshire would look into in future. In his closing remarks to the meeting, Buffet said that he not only hoped that the audience came back next year, but he hoped for himself to be present next year as well. I hope you have liked this summarization of the Berkshire Hathaway meeting and it has helped you in gaining insights into the investing world and how investing should be approached. I had a great time listening and watching the video, a 4.5 hour video of the whole meeting online. But I thought people who do not have so much time, this video could give you insights about what actually transpired into that meeting. I hope you have liked this video of mine. Please like, share, and subscribe my channel for more such educational and informative videos. Until next time, stay safe.